Government is incapable of managing the economy. That's an absolute documented fact. This is on all levels. Quite frankly, they shouldn't try to, but they do and they will. The new spending bill got passed so that people can get their checks, so that money can be dispersed to places where it is needed most. But when you look at it in depth, most of the taxpayer dollars are being wasted on other avenues. But they were lobbied, they were pushed, and your tax money went away just like that. You came here for the truth, so let me unveil that for you. Today, we're going to talk about the spending bill. We're going to talk about government. We're going to talk about the Federal Reserve. We're going to look at what's happening in the economy because this is going on. For so many people, they're hurting. But you look at another group of people and they're doing just fine, better than ever before, in fact. So you see a disparity, a growing disparity that some people are willing to acknowledge and other people, quite frankly, they just don't see it. Now, I'm willing to look at this information in depth on a daily basis. I hope that you are too. This is so integral, not just for those who are interested, but of course, everybody essentially needs to be aware of what's happening because then we are a possible victim. And I use this right here, talking about pensions, because it is so critical. Think about this. The government is spending more money than ever before. As that spending increases, they have a couple options. They could employ all of the options, or quite frankly, they can do one or the other. It depends how they want to go about it. But they can increase taxes in order to pay for that. They can print their money and actually fund their own deficit. They could certainly do that. And technically, they already are doing this, but on a grand scale. And they have the option of cutting back services. If they cut back on services, it goes from the healthcare, it goes from the roads, the infrastructure, and maybe, just maybe, it comes off the pensions. This is something that I believe people should be concerned about. They should be paying attention to. But unfortunately, all they're trying to figure out is where the next paycheck is coming from and how the Kardashians are doing today and all this nonsense. So I'm glad you're here. Let's get into it. Here's when direct deposits of $1,400 stimulus checks will be officially available. Yes, they will be deposited, as you can see, seeing the green, March 17. And I wanted to note this because the stock market is going to love it. You know that. And you will see the Robinhood accounts that are going to get this $1,400 deposited right in and immediately spent. So this could be a short-term, at least a short-term boost, not to the economy, of course, but to the stock market. The stock market is going to see the benefit of that. So you have taxpayer dollars that are going towards, you funnel this into the actual taxpayer, the individual. This person takes it and they buy Apple, they buy Amazon, they buy all of these companies. So in effect, indirectly, the taxpayer dollars are going to the big companies, the trillion-dollar companies. They're bailing them out. You also have the Federal Reserve, which are buying corporate bonds of all of these giants. So guess who wins? That's right, the big boys yet again. Out of Forbes, they posted this article, is there wasteful spending in the new $1.9 trillion stimulus bill? Let me give you the little spoiler. There is. I'm not going to be able to cover it all, but if you look at it closely, open the books, they break it down. And sure, you can check everything out, which I recommend that you do, but I'm just going to cover a couple points here. $1.5 million earmarked for the Seaway International Bridge, which connects New York to Canada. $50 million for family planning, which is basically Planned Parenthood. $852 million for AmeriCorps Vista, and the National Senior Service Corps. And you could say, this is okay. These are good institutions, and this is helping people in general, and so on. This has nothing nothing to do with the bill. It's got nothing to do with the bill, but they stick it in because they know people are going to be pushing their those in power to basically move this through. And hey, this is the relief bill. Why aren't you passing the relief bill? Oh, because it contains billions and billions and billions and billions of dollars worth of all this other stuff that has nothing to do with it. Okay, let's get it passed. $200 million in the bill to the Institute of Museum and Library Services, $270 million for the National Endowment of the Arts and Humanities. This is what's in there. Ladies and gentlemen, read this stuff. Whenever I see people that talk about how fantastic government is, this is the bloat. This is the big government. This is the gluttonous government that I see all the time. It doesn't matter where you look. Look at Canada. Look at what they did. Ridiculous. Look at the United States. Look at all the governments around the world and what they are doing and how they are reacting. $350 billion to bail out the 50 states and the District of Columbia. The allocation formula uses the unemployment rate in the fourth quarter of 2020. And of course, New York, California, they're going to do just fine. $128 billion to fund K-12 education. $86 billion, check this out, to save nearly 200 pension plans insured by the Pension Benefit Guarantee Corp. There are no reforms mandated while these badly managed pensions are bailed out. Many of these pension plans are co-managed by unions. So you've got the money that's going to be coming out of the taxpayers. They're going to go and bail out these pensions, and that just gets them above the line again. And what's going to happen next year and the year after and the year after that? Look, it's inevitable. You can't just pump money in, take it from the taxpayers and push it into all these different things. It's just a matter of fact that over time, you have an absolute failure. But the promise is always there that, we're going to do good things for you. We're going to help you out, and you are going to have your faith restored. But let's be very clear about this. If you look at their actual activities, not what they say, do not watch the speeches. Do not watch the speeches because you will be manipulated. Do not look at the talking points that is coming out of the mainstream media. You have to go into the actual documentation and see it for yourself. In this case, openthebooks.com had that information. Forbes posted it, and you see, wait a second, this is supposed to be a relief bill and money is going here, money is going there. That's tax dollars. If you're paying into the tax system, you should be upset. Just about everybody right now in the financial world is talking about massive, massive growth. Some of them are considering the fact that there might be a lot of inflation, but in general, you look at it and they're saying there's so much growth, we're not going to know what to do with it. It's going to be interesting because how do you upgrade your GDP forecast to 7% and your inflation target to 2% and forecast for unemployment to 5% and then say we're going to be super easy? And it's so true. Why in the world is everything in these statistics here looking so fantastic, but at the same time, you're pumping money in like never before? I have brought this up so many times, and even Charles Schwab is talking about the same thing. I think it's pretty strange, don't you? If you are out there saying that everything is just fine, I see the comments all the time. My goodness. Why is everything super easy? Well, inflation is low. We don't need to worry. It doesn't make sense. Something doesn't add up. This is an interesting one, and it's talking about what happened during the period where very high inflation came through, 1970s, how the government reacted to it. Take a look at this really quickly. In the S&P 500, the US was at an all-time high in late 1968. Inflation was already on the rise. By 1974, inflation was more than 11%, but the stock market had lost more than 40% of its value. It would take until 1993, 25 years later, until the S&P reached that level after adjusting for inflation exceeding its high from 1968. Just think about that. So buying an asset class that's already at its all-time high just prior to an inflationary period isn't necessarily a no-brainer option. That's what we're talking about today. When you see what has happened and you factor in inflation, suddenly things are looking really, really terrible. You're buying in at the peak, just like everybody is doing, and certainly you can go up more. Who knows? Who knows where? But the people that are buying in now are probably still going to be buying in 6 months from now, and a year from now, and 2 years, as long as it goes. They'll buy all the way up past the peak and all the way down probably. And they think that that's okay. And for some, maybe it is. But the point here is that you cannot wonder and invest in an area that you are completely unaware of, because we have never seen something like this before. We have never seen global central banks doing what they're doing, governments doing what they're doing, and so on. I've gone into that so many times before. But that's the big conundrum. That's the big question today. And that leaves you with a lot of those question marks for your portfolio as an investor. All the analysts out there, quite frankly, they're giving you this message. Demand will increase further for technology stocks. Quote, as long as technology is solving real problems for people, there will continue to be a market for these type of companies. There will be more demand for technology solutions across the board. Technology has been there for a long time. Fire. How about that? When fire was first invented, wow, that's a technology. This simple technology term needs to be really reevaluated. It's ridiculous. There are new technologies every single day, okay? That is just the focus of all of these people that are pumping money in and saying, hey, look, Instagram and Facebook, everybody's on them. Let's pump our money into it. But you know, it's a lot more complicated than that. And through the cycles, people learn a very hard lesson. The central banks keep doing what they're doing. And of course, this keeps the whole stock market globally, but most importantly, what's going on in the US afloat, and it just pushes it higher and higher as you devalue the currency. You can look at this on all different levels. This happens to be from Yardeni, but of course, I give you updates all the time. And to me, it just shows you how far they're willing to go. Not just the $1.9 trillion for one round of stimulus coming from the US government, but look at what they're doing all over the place. It is unbelievable. If you've been tuning into the Money GPS for a while, you know that I have got a very good sense of humor. And this right here is the joke of the day. The FOMC's projections, what they love to do is create these dot plots. And essentially, this is where those voting members believe that they'll be, in the near future. And you could see, my goodness, this is ridiculous. Anyway, 2022. All right, 0. One person is saying one rate increase. One person. And you go beyond that. All right, 2023, largely all agreed upon 0% interest rates. But in the longer run, oh yes, that's right, 2.5%. The rate they couldn't get to last time they tried to increase. But don't worry, next time, we promise. Corporate earnings are down. The average earnings per share in the S&P 500 is 30% lower than prior to where it was at the beginning of 2020. Corporate revenue is down, yet corporate debt is substantially higher. The US economy, as measured by the GDP, is weaker. Consumer spending is still lower than before we had in early 2020. Unemployment is higher. Government debt is hilariously out of control. And the new ruling party just announced they want to raise taxes, lower profit, lower revenue, higher debt, higher taxes. None of these trends should be favorable for stocks, and yet the market is up and continues to go higher. This shows you how out of whack everything is, and it doesn't end well. Whenever you see it historically, this doesn't end well. That means your portfolio, the way you manage your investments, you should take care to ensure that there's a moat in between you and the outside world. Alibaba's web browser is removed from Chinese app stores. The reason I mention it, not just because what you see in China, but look around. This goes on for Alibaba's businesses, with Ant Group, I believe it's called, Jack Ma, how he's been terribly affected by what's happening there. There are strict regulations, and certainly he has felt it very hard. Tencent recently got hit. I covered that, I think, in the previous video, the one before that. This is yet another level of this. What's important here, and the reason I mention it, is that all of these tech companies have to deal with almost no regulation at all. If you look at the actual total regulations on the financial industry, which has few regulations, you look at that and compare them to the tech sector, it's a fraction. It's a small fraction. Why? It's a newer industry. And I believe personally that those, people, the policymakers, those people that are supposed to be protecting everybody, really don't understand it all. If you look at when they're, the Congress is supposedly grilling whoever it might be, Zuckerberg or whatever, they don't even understand what they're asking. So how are they going to put in place regulations that are, supposed to protect people and so on? No. The reason I mention this specifically is because as an investor, if you're truly overdoing it on whatever it might be, one of these tech companies, you've got to watch out. It is very important to always diversify your bets. Diversify. And that doesn't mean you're going to get the best return, but it means you're protecting the downside. That's all for this video. If you found that informative, hit that thumbs up button. When you do, you're supporting me. I want to thank you for that. If you want to learn about e-commerce, you can go out there. There's a $1,000 course, $2,000 courses that sometimes they're actually very good. But if you just want to learn for free, you can do so at the AmazonGPS.com. If you want to know about all the details of the financial system, but you want it explained extremely easily and very simply, and these two books will give you just that. So check them out at the link in the description. Have you seen this video yet? You definitely want to. If not, click it and I'll see you there.